Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix, Paul, Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. A lot going on, as it seems to be every single day from a policy perspective. News flow coming out of the White House, fast and furious. That's why we check in with our next guest almost every day, Nathan Dean, Senior Policy Analyst at Bloomberg Intelligence. He's responsible for all this, folks. So if you want to complain to somebody, go to Nathan Dean. Nathan, what is kind of the latest feeling within D.C. as to how this tariff situation may unfold here now that the courts are starting to weigh in?
So I think the Washingtonians are taking the approach that, this tariff fight is not over. Obviously, the courts have said that, President Trump's authority on IEEPA, or this International Emergency Economic Powers Act, is somewhat limited. And obviously, we'll see that play out at the Supreme Court later this week. But, President Trump has other tools in his tool belt. Now, I'll say things like Section 122 or 338 or 301. But what you need to know is President Trump does have the authority under 122 to implement a 15% tariff right away up to 150 days. 338 can go up to a 50% tariff. Now, this 301, 232, that requires investigations. Where I'm going at with this is that there are other tools that President Trump has to implement these tariffs. And so the courts came down on IEEPA, and that's certainly that court case is going to play out. But if the White House decides to retreat and says, you know what, let's go about a different avenue here, and this is what Peter Navarro hinted at when he spoke earlier on Bloomberg Television, they can certainly reinstitute these tariffs. It's just going to have to go through a different process. The good news for investors, though, is that the process is usually a little bit more transparent than President Trump just implementing these via Truth Social.
Does it matter? How does this read through to, say, the budget deficit? Because raising revenue through tariffs was like a big part of that bill.
So it doesn't really impact it all that much. So Congress is trying to actually pass this one big, beautiful bill, and they've known in the back of their minds that this tariff discussion is taking place, but it's not in the record. It's not part of the calculations of that bill. So, it's almost like they're just keeping in the back of their mind and said, okay, maybe we're going to be able to support this. But if you take out all the tariff revenue and you just presume that we're not going to collect anything else, Congress is still going to pass this bill. The Republicans are fairly aligned with President Trump when it comes to extending these tax cuts, and also for these additional $1.5 trillion in taxes in terms of like no taxes on tips, no taxes on overtime, et cetera. So the cost portion of it is there, but I don't think Congress is really going to pay attention to it. They're going to still pass this thing.
So what's the status of this tax bill? I mean, just timing wise, talk about getting lost in the clutter of the news here. Where are we with the timing here?
Yeah, so the White House wants this passed by the 4th of July. It's obviously passed the House. It's now over in the Senate. Now, the Senate is out this week. There's been discussions among staffers of trying to figure out what in the House will pass what's known as the Byrd Rule. Essentially, are there provisions of this House bill that just won't work through the process of reconciliation? Now, I don't think that really is all that important to the tax or the Medicaid or to the Inflation Reduction Act portion. But next week, we should see the senators come back, and we'll start to see discussions of what are they going to pare back from the House bill. Things like Medicaid work requirements, they would kick in at the end of 2026. That potentially could get pushed back. Very important to solar investors, the Inflation Reduction Act. Some of that language could also get pared back. We'll probably see that play out over the next 2 to 3 weeks. And then I think the Senate, if they had all their ducks aligned, would try and go for a vote probably by mid to late June. But don't be surprised if this just bleeds back another couple weeks and we see this in July.
Elon Musk apparently ditching D.C., didn't like the bureaucracy, going to go back to his company. What does that do for Doge, for cost cutting, for anything?
So there's two really aspects of the Doge that's really important to investors, and that's obviously, what is the federal government spending outside of this one big beautiful bill, aka the appropriations process. Now, Bloomberg Government actually put out a piece this morning. They have a really cool chart in there that shows you the government expenditures by agency for the month of May for 2025 versus 2024. And the agencies are spending almost about half of what they spent last year. So DOGE has definitely done an important, influence in terms of getting agencies to spend less. But ultimately, it is Congress that needs to decide what the appropriations is and what is the spend here. That's going to come up in September, but it's also going to come up in a rescissions package. The White House will most likely send it to the House next week, and they'll say, look, we want to codify a lot of these DOGE cuts. We need you to pass this. I would say, though, even though the filibuster isn't subject to this, so it just requires a majority vote in the House and the Senate, a lot of times policymakers are like, look, I love the idea of cutting federal waste on paper, but a lot of that federal waste is also going to my district. So I'm not sure this package will continue or will pass. And I will say, just at least at a first glance, we're not seeing many market impacts to this rescissions package.
All right, I'm just looking at some BI litigation. We have some folks in Bloomberg Intelligence that just look at litigation because it impacts industries, it impacts companies, and sure enough, tariffs are, first and foremost here. BI litigation analysis thinks there's a 60% chance the Supreme Court will side with the court's ruling and that tariffs may exceed the president's authority, but it will be very close. So that seems to be what President Trump and his administration are betting on, that they can get this past the court.
Yeah, so that obviously, that's my colleagues, and my colleague Holly Frum is the one that's leading this effort. She's actually chatting with clients as we speak. But I will say that I was talking to her prior to coming on air, and she said that if the Supreme Court were to come out and say we are going to take up this case and potentially implement a stay, that could be indicative of their thinking going forward. Because the red line that you showed before I came on the air talked about how the Supreme Court could potentially take this up this week. If we see signs from the Supreme Court that they're somewhat amicable to fast-tracking this, ultimately it could be beneficial. Now, still, it's very close to call, but Holly's original timeline is that if the Supreme Court says that they're not going to take it up, and this actually may have to go through the Court of Appeals and so forth, you would see an ultimate decision on this in the fourth quarter of this year.
What kind of questions are clients asking you right now? Like, the world's really changed in the last couple weeks. What are they asking you the most?
Well, obviously, with today, it's the tariff news and how are companies preparing for this. Our tariffs are off as we speak, and our response to that is obviously, the White House has the ability to appeal. They have appealed. But really, it's just the future of what President Trump wants to do in terms of tariffs. Obviously, there was discussion yesterday of the taco trade, if you will. And what I will say is that President Trump truly believes in tariffs. He still believes in them. He believes them as a point of leverage and a point of negotiation. And so whether or not it's using IEPA or Section 301 or Section 232, tariffs are here to stay, and they're most likely here to stay for the next 4 years. But are you getting a tariff like 145% tariff on China, or are you getting a 10% tariff on the United Kingdom? Those are the questions that the clients want to know, and we'll see that play out over the next few weeks and months.
And Nathan, I can't help but notice that the Democrats are awfully quiet these days. They've been since the beginning of President Trump's administration, and my understanding was, yes, they're a minority, but not by much. And it was razor-thin majority for the Republicans. It doesn't feel that way from the Democrats. Am I overthinking that?
No, actually, the Democrats are somewhat irrelevant when it comes to tariffs and also the one big beautiful bill, because tariffs, President Trump is doing this via executive authority, so the Democrats aren't involved. And when it comes to the one big beautiful bill, they're doing it via reconciliation, which bypasses the Democrats. But the Democrats will be able to start to fight back later this year, because once the big beautiful bill passes, that's about it for Congress. And so come September, you're going to have things like the government funding or a government shutdown and so forth. And the Democrats are really going to try and start positioning themselves for next year. It's just that the Republicans are using procedures and processes at the moment that bypasses them. And as a result, Democrats are really struggling to figure out how to combat that.
All right, Nathan, really appreciate it. Thank you very much, Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. He's definitely really busy, but I feel like maybe things have calmed down a little bit for him.
Yeah, and he's
relative from what they were like a month ago.
His breadth of knowledge just amazes me about how all that stuff works.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Let's get more on where we are with Harvard and President Trump on the latest evolution of this drama. Janet Lorin, higher education finance reporter, joins us now from Bloomberg. I didn't think you probably didn't think you'd be this busy in this particular way. All right, what's the latest?
Well,
The latest, right now, commencement is going on.
Oh, okay.
So that's...
I wonder who the speaker is this year.
Yesterday, I believe it for the class day, it was Kareem Abdul-Jabbar for the undergraduates.
Ah, cool.
So it's, this should be in some ways a really happy celebratory time for Harvard, which it is, and especially for students and their parents and their grandparents who've all come. But just like last year, there is a palpable tension at Harvard around graduation. Last year, the question of protests, what was going to happen. An animal rights activist threw glitter on President Alan Garber during the ceremony. And today, there is also a very palpable tension, but it's a very different one, especially with international students, because it's unclear what their fate is. It appeared that yesterday the State Department has perhaps widened that ban on visas regarding all those with Chinese affiliations at Harvard. Things keep changing. It's hard to keep track on what's actually happening, but today, should be a happy day for the students at Harvard.
Harvard, it just feels, again, I have zero affiliation with Harvard. They're being targeted here by this administration vis-a-vis other Ivy League schools or the University of Texas or the University of Florida or anything like that. Do we know why?
Well, Harvard is the biggest prize out there. It's, we've talked about this before. It's the oldest university in America. It predates the country. It's the richest school with a $53 billion endowment. And in some ways, it's more symbolic. What else, if you want to make a point, everybody in the world knows the brand of Harvard. Very powerful, almost in some ways like a luxury good, especially when viewed overseas. And yesterday, President Trump talked in the Oval Office about Harvard should cap the number of foreign students at 15%. It's more like 27% now. And I think that number is surprising to a lot of people, that these campuses have almost more than a quarter of the students are from other countries.
Well, to that point, there is a headline that the Harvard case judge is now expanding the block of President Trump's foreign student ban. Does that imply that more foreign students get a stay and are allowed to sort of stay at Harvard or apply to be at Harvard?
Well, keep in mind that just because the judge has blocked something doesn't mean if you're a student, you're going to be making decisions based on what's going to happen over the next 2 years or 4 years. And you want to be able to stay and complete your education and not have to think, oh my God, I have to transfer. I have to find a place that has an open spot and would take me.
With my affiliation with Duke University, I saw this at the board level, the first Trump administration, and now again, the exact same thing is happening now. They're seeing a drop in applications and interest from foreign students because they just don't know what the situation is going to be a week from now, a year from now, 3 years from now. All they know is, I don't feel as welcomed as I thought I would, or I'm going to need to be. So I'm going to look to Canada. I'm going to look to Europe and things like that. How hard do you think Harvard really is going to fight this, do you think? Just all of these things across the whole, I guess, panoply of what's going on.
Well, Harvard has already filed 2 lawsuits. The first one was in April in response to a letter that the administration made in lots of demands, and Harvard doesn't disagree with some of the things the government is asking for, but it does disagree in the way that it is going about it. So Harvard also has to feel like it's supporting its constituency, the students. They have to show that they're supporting the students. And I think in some ways the Harvard faculty has never felt more unified. It's, there's lots of different factions there. Certainly the humanities faculty are not going to agree with some things that the science faculty and priorities. But in some ways this has unified them and perhaps alumni because they see somebody is standing up to Trump, and Harvard is, a very rich entity.
Janet, fascinating. I'm sure we're going to be talking to you more in the future regarding this and other topics in higher education. Janet Lorin, higher education finance reporter for Bloomberg News, joining us live here in our Interactive Brokers studio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Well, let's go to Matt Stucky, Chief Portfolio Manager for Equities at He's at Northwestern Mutual Wealth out there in Milwaukee. Pound for pound, some of the best money managers in the world are in Milwaukee. I have no idea why. Matt, what do you make of this market? I mean, we were down 20%. We've retraced much of that decline. And now year to date, we're basically unched on the year. Where do we go from here?
Well, good morning. Thanks for having me back. Look, I mean, I think the market's likely to stay pretty volatile. While we've round tripped, the tariff-induced losses in April, by no means are we out of the woods, just in terms of the uncertainty that still remains in terms of what trade policy is going to look like a month or 2 or 3 from now. And so, days like today where you have really strong earnings reports after the close, from Nvidia kind of carrying the open higher and then kind of whipsawing back down, I think are kind of par for the course as we kind of think through kind of how markets should behave from now to the end of the year, just given the uncertainty that still remains.
So when it comes to Nvidia, is this the ballast that we are all hoping for? Like, does that really help unleash animal spirits, or is that just confirmation that everything's okay, but that's harder for upside?
For Nvidia specifically, I think what's unusual about the setup into the print was, this was one of these times where, Nvidia was somewhat cheap relative to expectations, and so it comes into question whether or not the buy side and sell side were mismatched in terms of where those expectations sat. And just to kind of get into it a little bit deeper, back in April, Nvidia traded south of $100 a share, and if you believe kind of the base case that a lot of sell side shops are pitching, we're talking $6 plus per share in calendar year 2026 in terms of earnings per share. That makes Nvidia a sub S&P 500 multiple name, and that's where kind of the stock was heading into the print. Of course, it kind of rebounded with the rest of the market in April, but Nvidia had historically always traded 35, 40 times forward earnings, and it was sub 20. And so, this has just been a little bit of a sigh of relief if you're a Nvidia shareholder, that the growth story is still intact, and some of the concerns about supply chains and being able to really ramp up, rack scale Blackwell systems in the back half of this year seem to be in the rearview mirror.
So, Matt, does the Nvidia results last night a little bit better than expected? Does that give kind of a green light for tech broadly defined here? Can tech continue to be a leader in this market?
Well, if Nvidia doesn't work within tech, what else is really going to work within tech? And it should probably be a little bit more specific with that. Within semiconductors, how about we just kind of keep it to that kind of industry? Look, how many companies can you point to that have to sacrifice $10.5 billion worth of high margin revenue over 2 quarters in the form of H20 revenue, still outperform the overall market on a year-to-date and 1-year basis? There's not a whole lot of them, and Nvidia is the only one that I can think of that's been able to clear that hurdle. But I think if we kind of also think about the setup into the quarter, you're kind of clearing some of the China uncertainty by just kind of removing the revenue piece altogether for them specifically. That's not the case for the rest of technology. There's still tariff-related concerns for a lot of other names within tech. Nvidia is just kind of already kind of past that, and we'll probably have to see some others also pass that into the future.
So we got this trade ruling, and then we got Nvidia. Does this clear the runway for the S&P to now test again record highs, or is it too early to call that?
I think it's too early to necessarily, believe that the trade-related and tariff-related fears are behind us. While a lot of the tariffs were rescinded via the court order last night, there are other avenues to restoring those tariff levels, whether we're talking about Section 272, which is still in front of us, or some other of the authorities that the president has to restore the tariff levels country by country. That uncertainty, from my perspective, still remains. And so, the runway from here, I think, is really just a function of kind of how the labor market holds in. We see sentiment data really bounce around quite a bit, with the consumer, with, the April 2nd announcement kind of really plunging consumer and business confidence, but then it's starting to ramp back up a little bit. But during the interim period, if we're looking at the April credit card data or what we've seen from the Chase card data in the weeks of May, that, sour sentiment on the consumer level hasn't really translated to changing spending behavior. In fact, it's kind of been a little bit better than expected, and at least in line with trend level growth that we saw earlier in this year. And so while consumers are telling us that they're anxious about kind of the outlook, that isn't affecting their behavior, and that's ultimately what drives earnings.
All right, good stuff. Really appreciate it. Thank you very much, Matt. Matt Stucky, Vice President, Chief Portfolio Manager of Equities at Northwestern Mutual.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.